Welcome. In this video, is Zbcn coin really the next 10x altcoin? We will analyze this. Don't forget to subscribe, like, and please watch till the end to understand.
The importance of ascending trend structures in technical analysis is quite significant for investors to understand price movements. An uptrend indicates that the overall direction of the market is upward and that buyers remain in control. Now, here's the situation we have. On the chart, there has been a long-standing ascending trend line, and the price is currently touching that trend line. This touch is actually a critical threshold because in the market, testing trend lines always carries great meaning. When a price reaches an ascending trend line and begins to see strong buying reactions there, this often signals that the market may attempt another upward move. Especially when the price touches the trend line and bounces, it shows investors that buyers are still strong and that despite the pressure from sellers, they are managing to hold the trend. This is one of the most important indications that the market is in a healthy uptrend. In such a situation, from a technical analysis perspective, the ascending trend line acts almost like a zone of safety. When the price reaches this line, buyers are expected to form a strong line of defense. Trend lines attract attention because they hold both psychological and technical significance for many investors. Since the majority of investors expect the price to bounce from these lines, they tend to concentrate their orders around these areas. Therefore, when the price touches and bounces off the trend line, it usually happens due to these orders being activated, sparking a swift upward move. Such a bounce is often a strong signal confirming the continuation of the trend. Testing an uptrend also shows that the market is progressing in a healthy manner. No market rises in a straight line forever. There are always corrections and pullbacks in between. When, during such pullbacks, the price reaches the trend line and reacts upwards, it demonstrates that buyers remain active and that the trend is being preserved. In other words, this situation confirms the strength of the trend. If a strong group of buyers steps in when the price touches the ascending trend line, they push the price higher, allowing the trend to continue. That is why the current contact with the ascending trend line is both critical and positive. Additionally, in this kind of scenario, a bounce off the trend line generally increases the market's momentum. Many investors view the trend line as a buying opportunity. Especially large funds, institutional investors, or professional traders often use these trendline contacts to buy. This heavy buying demand can quickly cause the price to make a strong upward move, which may lead to the beginning of a new rally. So the current situation is setting the stage for a potentially strong upward momentum or even a rally. There is also an important rule in technical analysis: never trade against the trend. Since the uptrend is dominant here, a bounce off this trend line would support the continuation of the trend. If the price bounces and starts moving upward from the ascending trend line, it will also strengthen market confidence. Investors will see that the trend has not been broken, but is instead becoming stronger. This sense of confidence fuels buying appetite in the market, further accelerating the upward movement. In such a situation, with the beginning of an upward move, it is also quite likely that the price will head toward new highs. The strong support taken from the trend line shows that buyers have reorganized and regained control over the market. This supports both short-term and medium-term increases in price. Especially if the bounce from the trend line is accompanied by an increase in volume, it is one of the signs that this upward move will be stronger. A bounce with high volume is usually a precursor to lasting rises. Another important point is this: the bounce off an ascending trend line is not only a technical movement, but also a psychological event. Trend lines serve as symbols of security in the eyes of investors. Market participants feel safer buying at these levels. This sense of psychological security allows prices to move upward more comfortably. That is why a bounce from the trend line is not just a graphical event, but also a powerful signal that activates the psychological dynamics of the market. Right now, the price touching the ascending trend line also marks a decision point in the market, because an upward move starting here would strengthen the market again. The upward move following a bounce would confirm the continuation of the trend. This would raise investor expectations and increase market confidence. At this point, the trend line is not just a line, but also a turning point. If a strong bounce occurs here, it would be possible to say that a new wave of upward movement in the market has begun. In conclusion, The testing of the ascending trend and the price currently touching this line is a highly critical and positive development. A bounce from here will create the necessary ground for a new upward move to begin in the market. With the start of this move, prices are highly likely to advance to higher levels, and the trend will continue in a healthy manner. Such a scenario encourages investors to act more confidently and helps the rise to become more lasting. The fact that the trend line works in this way is one of the strongest indications in technical analysis that the uptrend will continue. But we can't decide the analysis with trends only. Let's look at other metrics. Stay tuned.
In the MACD indicator, the lines moving closer together for an upward crossover is an extremely important sign that momentum in the market is beginning to shift positively. Because by its very nature, the MACD is a powerful indicator that measures the momentum of an asset's price movement and is also used to capture trend reversals. Here, the approach toward a crossover indicates that the market is starting to shift from sellers to buyers, meaning the balance of power is gradually changing. Therefore, the narrowing distance between the MACD line and the signal line is like the first sign of spring. Even if the crossover has not yet fully occurred, it gives participants clues about what could happen in the future. This is why investors closely monitor upcoming bullish crossovers in the MACD and see them as a major opportunity. Such moments can be a precursor to strong upward moves in prices in the near term. Before a crossover in the MACD, there are usually periods of stagnation or consolidation in price. During these times, investors are uncertain. Some expect prices to fall further, while others sense the possibility of a rise. At this point, when the MACD lines move closer toward an upward crossover, it reveals the hidden shift in market strength. The shrinking gap between the signal line and the MACD line indicates that sellers are losing their grip, while buyers are steadily gaining control. This gives investors a very clear message. The direction is about to change, and a rally is on the horizon. Therefore, this signal is a critical moment for investors to reassess their positions. When an upward crossover occurs, the market often experiences sharp rallies. The reason is that this signal is followed by many investors. The MACD indicator is used by millions of traders worldwide, and crossovers are among the points they pay the most attention to. Therefore, when the lines cross upward, a collective sense of confidence tends to form in the market. Buyers gain courage, while sellers retreat. This collective psychological shift pushes prices upward rapidly. In other words, the crossover signals the start of a rally, not only from a technical perspective, but also from a psychological one. However, an approaching crossover in the MACD sometimes requires investors to be patient, because before the actual crossover occurs, there can be false moves or fake reversals. Careful investors wait patiently for the real crossover to form. When the lines cross upward, it becomes possible to act with confidence. The important point here is that the approaching crossover itself already shows a preparation phase. During this time, the market gathers bullish energy, like a bow being drawn back, and once the crossover happens, this energy is quickly released. That's why an upcoming MACD crossover always carries the potential for a strong rally. The crossover in the MACD also confirms that the trend direction is changing. Beforehand, prices may be in decline, and investors may feel hopeless. But when the lines approach an upward crossover, it signals that the gloomy outlook is coming to an end. The downtrend is ready to give way to an uptrend. This is extremely positive for investors, because buying near the bottom of a market offers very high profit opportunities. Thus, an approaching MACD crossover is also a sign that a new era in the market is about to begin. In such crossovers, other indicators usually provide supporting signals. For example, the RSI starts to recover upward, trading volume increases, and price action shows signs of reversal from the bottom.
The cup and handle pattern is one of the most important and reliable structures frequently followed by investors in technical analysis. The main idea of this pattern is that the market first recovers from a bottom region formed over a long period of time, and following a corrective move, a new upward momentum begins. The cup part represents the price forming a base and recovering after a prolonged decline, while the handle represents a short-term consolidation after this recovery. For this reason, the cup and handle pattern is an important signal that prices may enter a strong upward trend in the future. Especially for investors, once the cup is completed and the handle forms and breaks out, it is seen as a sign of significant potential gains. The depth of the cup is the main measure used to determine the target price. In technical analysis, the logic is that prices recovering from levels where they previously fell indicates that these regions could psychologically act as future target points. If the handle completes and the price breaks the resistance line, the rise is expected to continue by at least the depth of the cup. This can sometimes signal increases over 100% or even up to 10 times in value. Looking at the formation process of the cup pattern, the first stage is usually a downtrend in the market. This decline represents the period when investors lose confidence, selling pressure increases, and the price bottoms out. However, as buyers step in at this bottom level, the price gradually begins to recover. This recovery process forms the first half of the cup. As the price continues to move upward, the right side of the cup takes shape and the price eventually reaches the levels where the cup began. At this point, it is natural for the market to face some profit-taking and a small pullback. This pullback creates the handle. The most important characteristic of the handle is that it is much smaller and shorter compared to the large cup. If the price does not fall too deep during this handle, consolidates with sideways or slightly downward movement, and then breaks upward, that is when a major rally begins. At this stage, market participants believe that previous resistances have been overcome and buying pressure increases rapidly. The most important aspect of the cup and handle pattern is the clarity it provides in determining target prices. The distance between the lowest point of the cup and its starting levels is used as the measurement in technical analysis. This distance represents the potential level the price may reach after the breakout. For example, if the depth of the cup is 10 units and the price breaks upward after completing the handle, the target price will be at least 10 units higher than the current level. In the cryptocurrency markets, these kinds of patterns are especially noteworthy. The high volatility allows these targets to be reached much more quickly. In fact, in some cases, the depth of the cup may signal up to a 10x increase. This means that once the price breaks out from the handle, a 10x rise potential may come into play. Such a scenario attracts great investor interest and drives the market into an enthusiastic upward trend. For a cup and handle pattern to be considered valid, certain criteria must be met. First, the cup portion should form over a long period of time. Small cups formed in a very short period are generally misleading. Long-term, broad, and deep cups provide much stronger signals. Additionally, the handle should not be too deep. If the handle drops excessively, it undermines investor confidence and invalidates the pattern. A healthy handle is usually limited to a retracement of up to 30% of the cup. If the pullback goes beyond this, the pattern weakens. On the other hand, the duration of the handle also matters. If it is too short, it means the price has not consolidated enough. If it is too long, investors may lose interest and the validity of the pattern decreases. The ideal handle structure is when the price pauses briefly, gathers strength, and then breaks upward. Another reason investors closely follow this pattern is its psychological aspect. The cup represents the market's recovery from the bottom and the rebuilding of confidence. The handle represents the period when investors hesitate and question, is this rise sustainable during a small pullback? But once the price breaks upward from the handle, all these doubts disappear. At this point, the majority of market participants believe the uptrend will continue and aggressive buying begins. This accelerates the rise and allows the pattern's targets to be reached very quickly. Especially in the cryptocurrency market, where investor psychology heavily influences price movements, patterns that inspire confidence, such as the cup and handle, can lead to explosive rallies. The most important signal given by the cup and handle pattern relates to the direction of the trend. The formation of this pattern generally indicates the end of a downtrend and the beginning of a new uptrend. For this reason, it acts as a reversal signal for investors. Especially after a long-term decline, the emergence of this structure is considered a strong sign that the market has changed direction. This change can signal not only a short-term rise, but also the beginning of a medium to long-term uptrend. Therefore, identifying a cup and handle pattern helps investors seize buying opportunities on time. Although the cup and handle pattern is considered one of the most reliable formations in technical analysis, it is not without its risks. False patterns or premature breakouts can mislead investors. Volume confirmation is especially important here. A breakout after the handle is not enough on its own. It must be supported by high trading volume. If volume remains low, the likelihood of a false breakout increases and the price may pull back again. This is why investors should pay attention not only to the pattern, but also to volume data. In a healthy cup and handle pattern, trading volume rises significantly at the moment of breakout, confirming the strength of the rally. The cup and handle pattern is very common in the cryptocurrency market, and successful examples have provided significant profits for investors. Especially in Bitcoin and major altcoins, this structure has worked many times in the past. For example, after Bitcoin recovered from prolonged downtrends and formed a large cup, followed by a short handle and an upward breakout, its price multiplied significantly. Such examples have increased investor confidence in this pattern, because when market psychology and technical analysis align, the cup and handle becomes one of the most reliable signals of an uptrend. In summary, the cup and handle pattern is an extremely powerful tool for understanding the future direction of prices. The recovery from the bottom forming the cup, the short-term consolidation forming the handle, and the breakout that follows are among the strongest signals of an uptrend. Especially in scenarios where the cup depth is large, the target price can increase up to 10x, offering an extraordinary opportunity for investors. Of course, volume confirmation, a healthy handle formation, and alignment with the overall market trend are important criteria for the success of this pattern. But when all these conditions are met, the cup and handle pattern not only provides investors with confidence, but also signals strong rally potential. In the cryptocurrency market, correctly interpreting this pattern and capturing the breakout moment is like unlocking the door to major future opportunities. Once the price completes its handle and breaks upward, the target is set by the depth of the cup, sometimes signaling up to 10x gains. In face of such a structure, the best course of action for investors is to remain patient, wait for the pattern to complete, and then join the strong rally that follows.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analysis, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.